Ladies and gentlemen, welcome back to the second half of the Future Show. Now less than 60 minutes away from the cash open for stocks on Wall Street. We've got some economic data. We've got Scott Bauer. We've got the CEO of Prosper Trading Academy joining us here this morning. Scott, welcome. Thanks for giving us part of your Tuesday morning. I'm noticing here GDP, ladies and gentlemen. Scott, I don't think it's necessarily going to get the most attention today. A lot of people are probably looking more away from this third quarter number in terms of a number that's further out. It did just come in, though. It looks like 33.4, maybe a little bit higher than the 33.1 expected. I guess one could kind of take that with a grain of salt.
Definitely a grain of salt, Ben. And, all eyes really now are on the relief package that was, just passed out of Congress. And quite frankly, what is happening now in Europe, in England, and how that may affect us. This number is a good one. Great. It's behind us. It's now forgotten. Time to move forward.
Let's talk a little bit about, we always bring up how, again, these numbers, as we recover, as things kind of come out of one of the most historic, events that the economy's ever been faced with, not only here in the U.S., but also globally, we should expect to see some ebbs and flows. We're seeing that. I mean, even this morning, I commented on how we saw some better than expected data out of the UK. But if we take a look at the German GfK number, which came out, the consumer climate, Scott, down 7.3%. Maybe not as bad as the negative 8.8% that they were looking for, but prior down 6.8%. And I mean, I'd imagine, again, that this is what we should expect to see. And partially what the currencies are reflecting here right now is the focus here on some of this economic data. You got the euro currency, Scott, which has been bid as some of that data has been better than expected. But ultimately, again, we should expect some bumps along the road, I guess is what I'm saying.
And that's what's adding to the volatility all over the place, Ben, and especially in the currency market, right? I mean, we don't know exactly what the recovery is like, and it can change literally on a week-by-week, let alone a month-by-month basis, depending on, like you said, the ebbs and flows of what's going on with new restrictions, new lockdowns, and the spread of maybe this new potential strain of the virus.
Yeah, and then ultimately these currencies, Scott, are also a reflection of inflation I've been arguing for a while, or lack thereof. I mean, as we've been talking about, I mean, the dollar necessarily is going to have a hard time getting a lift with rates at historically low levels, with inflation nowhere near to be found. I mean, even some of the components that are coming out with this GDP number, core PCE price index, core PCE prices, third quarter coming in at 3.4%, below the 3.5 they were looking for. Corporate profits, 27%, but you can see the PCE prices, 3.7%. I mean, Scott, these are numbers, again, that don't really raise major concerns here in terms of the inflationary front. And also, ultimately, that's going to weigh on the dollar, one could argue.
Yeah, no question about it. And we've seen the dollar maybe stabilize a little bit, which is probably adding a little bit of pressure to the downside of what we've seen over the last couple of days in commodities and the oil space. But you're right, Ben, the dollar is not going anywhere because all of the headwinds facing it are as heavy as we've seen in maybe years, quite frankly.
So the weakness in the dollar that, as you just mentioned, has kind of tapered off a little bit over the last couple of days with the weakness in the indices, that safe haven type migration is partially due to the bid, partially some of the weakness we've seen in the pound recently come back into play. That's helped the dollar come off those recent lows. But let's talk about, as you mentioned, the impact that has on commodities. It seems like crude oil did get a little bit of a lift from the dollar, but it's been held back from getting above that $50 level. It seems like it's looking for something a little bit more tangible in terms of this reemergence effort or economies getting back on track. I mean, the production side seems to be accepted right now by traders in terms of what we've heard from OPEC and some of the other producers recently, but certainly the demand side seems to be a focal point.
And it has been for the last 9 months, really. It is really all about demand. We talked earlier in the year about demand destruction.
Yeah.
I'm not saying that we're there at this point again right now, but that is the major drop that we've seen over the last few sessions. Crude recovered a little bit from the lows that it saw yesterday, but it just shows the vulnerability in the entire space right now to the risk headlines we're seeing about the virus. It really is not a matter, like you said, Ben, about production. The market has accepted that. But the ebbs and flows, again, as you mentioned, the ebbs and flows are literally on a minute-by-minute basis right now, and that volatility that we're seeing because of that is probably not going away anytime soon.
Yeah, volatility. You mentioned vulnerability. I'd imagine some of the backups that we're hearing at Dover and some of the trade-related concerns there ultimately just add to some of that vulnerability. It'll be key to see. I mean, is that the level that we need to keep an eye on in terms of watching, Scott? Are there levels that you have your eye on in terms of crude? I mentioned the $50 level. It just seems to be struggling, and that's also one of those kind of psychological, midpoint zones that investors, traders tend to focus on. Is that the level to the upside we need to breach?
For the longest time, we kind of saw that range of 40-ish, maybe 39 to about 44. That level has shifted higher now, and it's probably now 45 to 50.
Okay.
Now, 50 is not just a psychological number. 50 is there's some serious resistance there as well, Ben. So that is a level to watch. Listen, we could get news coming out in the next couple of weeks or so, which I think we're supposed to get out of Europe, in addition to what we've seen over the last couple of days about this new strain. And if in fact this new strain, yes, it's more contagious, however, the vaccine that's out there is as effective on this new strain, we could see a pop back in crude just as quickly as we saw this drop over the last couple of days.
Scott, talk to us real quick about what this means for gold, because now yesterday we saw the bid in the dollar come into play. In theory, that would provide a little bit of a headwind for gold, but I'm looking at gold and wondering, amidst all the concerns that we have with Brexit, all the concerns out there, I mean, where does this leave that oftentimes seen as a safe haven product, but it's still holding below 1900?
It is, but it did pop above 1900 overnight. And the rally that we've seen over the last week or two from 1820, 1830 up to where we are right now, I think that's pretty impressive in the face of everything, the headwinds that we've seen here. So the bottom line is, for me, there still is a lot of tailwind to the gold market here. I'm not saying that we're going to get back to that 1950, 1960 level that we saw earlier in the year, but I think gold for the interim here has to be bought on any dip.
Tosh, God, where's my head? Scott, I'm wondering, headed into the end of the week, what do you have your eye on? Because we have some key data points. We were talking inflation, personal income, and spending coming our way. We've got a lot of housing numbers as well, and the jobless claims moved up to a Wednesday instead of a Thursday. What should we be watching? What do you have your eye on?
I mean, we're going to get the last, personal income and spending numbers that we get before before Christmas. And I don't know if that's going to be a direct reflection on the state of the consumer, if you will, but I think it's going to give us a pretty good outlook on how people really have spent what they have for this holiday season. Maybe we get a little extra boost here. I don't know, but I think we might get a surprise to the upside, quite frankly.
Scott, I promise I will never call you late for lunch. I appreciate you joining us here.
Thank you, Ben.
On a Tuesday morning, take a look at currencies, take a look at the GDP data released at the bottom of the hour, market reaction to Scott Bauer, ladies and gentlemen, is the CEO of Prosper Trading Academy.